Back to another episode of Talking Intentionally. Today we're speaking with Jay and Ash from the Aptos team. This is a different Ash than our Ash, but we love him as much, and we really hope you enjoy this podcast. It's great talking to people at an organization at the size and scope of Aptos, and yeah, we really hope you enjoy. And if there are any speakers you think that would be interesting for Talking Intentionally, or any types of content you want to see, feel free to let us know in the description below. Till then, see ya. Hey guys, welcome back to another episode of the Talking Intentionally podcast. Today we got Ash and Jay. We got a different Ash for this one from Aptos. Obviously, if you guys are in crypto, you've definitely heard of Aptos. But yeah, would love to hear like what's up with you guys. I know Ash, you seem like you're in the Aptos office in New York. Jay, where are you calling in from?
Calling from Singapore.
Oh,
Nice to meet
nice.
everyone.
Nice. Yeah. There's
Yeah.
usually a lot of crypto conferences in Singapore. What's Yeah, it's like crazy. I guess like
Yeah.
Aptos is probably pretty widely distributed around the world, right? Like employee
Yeah,
wise.
we are opening up a small Singapore office. We're growing our presence in the area, but I think most of the people are in US, like where Ash is right now.
Yeah, we started in the Bay Area in Palo Alto. So we have an office there with mostly labs engineers. We have a New York office with more product and business people, and then we have a few folks in Singapore, and we're starting to expand our footprint in places like Dubai, Hong Kong, and a few other markets. But yeah, I would say our team, Jay and me, and the rest of our 25 plus people at the foundation and working for the ecosystem are probably the most distributed. We have to be everywhere, man. We can't be sitting in an office.
Speaking of an office, though, we worked out of your guys' office and we had the Phil and Dom Kwok episode from the Easy A guys. Shout out to them in the Aptos office. You guys have the absolute best snacks I've ever had in any office in my life. Like it is extremely solid stuff, all high protein, kombucha. Like, yeah, that's
Yo,
good stuff.
you know what's crazy is you categorize it as high protein, and I somehow find the stuff that is the opposite of that.
Dude, there's so much good stuff, man. Like I haven't seen like that many different types of protein bars like ever in my
Ash,
life.
yeah, snacking too much.
I'm stacking too much, man. I have the Aptos 15, but instead of pounds, it's kilograms.
Oh no, that's tough. Yeah, dude. So what are how did both of you guys get into crypto? I know Jay, you're more like in the degen trading side. Ash, I guess you're more in the professional side of crypto, but crypto there is no such thing, right?
Professional. Oh
Yeah.
shit, dude.
But no, I'd love to like hear like what was your like I guess stories into getting into crypto and yeah, where do you like really see yourself in the greater landscape of crypto? How about we do Ash then Jay?
Yeah, 100%. So I've have a background in consumer tech. One of my first jobs coming out of college was working for Spotify and driving growth of kind of subscription streaming in a market full of piracy. So I fell in love with consumer media and technology. I saw how great product experiences could change market behavior. I think in the few years I joined when they launched in the US, driving growth. And in a few years, we just saw the market turn in terms of people being like super cool with paying for music again. And it was all based on an amazing product experience. So fell in love with that and kind of growth marketing. And then I moved into YouTube. And the reason why I left Spotify to go into YouTube was I felt that consumer media at the time was still this closed retail environment. It was just using different types of backend technology to make things like peer-to-peer streaming more instantaneous. So when you're searching and playing a song, it happens immediately. But the environment was still kind of like a closed retail iTunes or iMovies environment. And YouTube was coming and trying to recruit people from Spotify. And I was one of those people. And they were like, hey, man, like Spotify's figured out subscription streaming. Like we want to do that too at YouTube. How do we like launch a subscription streaming service? And I don't know, I was young and bold, I guess, but I was like, I think that's fucking stupid. Like, why are you worried about what Spotify is doing? Like, Spotify's worried about what you guys have done. And my thesis was essentially YouTube had already built the infrastructure to have a native creator economy. And they even had like commercial terms directly aligned with Google and the creators themselves to like send money. right, to them directly, like directly into their bank account. And I was like, I want to work on unlocking that for artists because they're stuck in this retail environment, right? They're not creating content natively. They don't know how those algorithms work. There's tons of money to be made. They can start to like get out of their predatory deals with labels and license holders and like truly be free. That's what I want to work on. So I chopped wood doing that for 7.5 years. And then in 2021, I saw NFTs like booming on ETH. And, here I am 7.5 years figuring out how to crack the creator economy for artists. And outside the building, I'm seeing artists clear $20 million on selling digital goods. And I'm like, what the fuck is going on? You know what I mean? I'm like, okay, we monetize through advertising. It's not enough. And out here, people are literally selling like concert tickets, like a digital asset. And I just got obsessed. I like just kept going on OpenSea, like browsing new collections. I was just following it. But the UX was always bad. And going back to where I started and fell in love with consumer tech, I was like, I want to work for companies that have amazing UX. I've been lucky, Spotify and YouTube. So what's happening here? And then at the end of 2021, beginning of 2022 ish, I think like one of the first Solana NFT collections got minted, and a friend just sent me like a phantom wallet. They said go on Magic Eden, check this out, and I like did my first transaction, and it was smooth as hell. Like it was an experience I was used to, and I was like, holy shit, like now is the time I need to like jump in. So I left YouTube, joined a company that spun out of Solana Labs called Metaplex, which is the underlying digital asset infrastructure for the whole blockchain and ecosystem. Led business there and just learned a shit ton about not only like the NFT creator economy, but how NFTs were an underlying technology that could do a bunch of different things. Um, and then, after a couple of years, found my way here at Aptos, working at the foundation. So that's how I got into crypto.
Very cool. And what do you do at Aptos? Like just for anyone watching.
Yeah, I'm the head of ecosystem at Aptos Foundation. So in summary, what that means is um, keeping a balanced point of view across investors, founders, partners, community members on where the future of the network is going, and ultimately funding startups that can drive the next kind of level of change and adoption for crypto.
Very cool. And Jay, what about you, man? I feel like yours is more on the trenches of the come up.
You know, Ash Ash painted a really sexy story. I think mine is a bit different. Started in the DeFi trenches in 2020, right? That's when DeFi summer started to boom, right? I was working at a management consulting firm doing very boring like risk, money, AML, KYC kind of assessment. And it was also the time where the Fed was printing a lot of money during the pandemic, right? So meme stocks was booming, and that was when the DeFi cycle of 2020 first started, right? And I got really deep into DeFi through Terra, right? I think Terra was probably the DeFi hub of that cycle. Um, the 20% yield from Anchor, right? I was really like writing white papers, investing into different kind of yield farms, every day looking out for the next food farm, right? That's when they call it because there was like Pancake Swap, Sushi Swap, and all the kind of like DeFi yield farms offering like 3 to 4 digits APR back then, right? So I was really looking out for all the different kind of sexy yield farming opportunities and looking deeply across like EVMs, Cosmos, Terra, Solana ecosystems on how do I get the best yield, right? So it was really deep in the DeFi ecosystem across different chains and started very deep into Cosmos, right? And that's when I joined like crypto.com, being part of their EVM ecosystem called Chronos, where I was driving the whole ecosystem growth of the EVM chain back then. Very involved in DeFi in general because it's something that I was always looking out for the next kind of Ponzi farm and where I can really squeeze out yields out of different kind of venues, right? And then sometime last year, joined Aptos. It was a great opportunity, right? Because the DeFi ecosystem was had strong fundamentals, but it was still very young, right? So a lot of opportunities to grow the DeFi ecosystem over the past year itself, and a very exciting time. Yeah, and here I am today.
Yeah, no, that actually is a great tie into like, I mean, like Axel's like essentially bet the barn on yield. And like, we have like the three risk profiles, low, medium, high. low end, we're constantly rebalancing between Aave and Morpho. High end, we're trying to get like into some of the degen pools. But I mean, like, I really want to know what is the behavior of someone who sees a 3 or 4 figure APR pool and is like, I want to put my money in this because like I think Warren Buffett's like like annual return is like something like 10% or whatever. And obviously if it compounds, it goes up a ton. But it's like if you like, I came from TradFi, so like my experience in like the world of investing is so like you can get 10%. That's insane. Um,
Yeah.
so like when you see a
It's
300% APR or
it's
whatever,
funny, right?
yeah, like
Because
how do you even what
you
goes
drop
through
every
one's mind when you see that?
yeah. I think at the point of time in 2020, 2021, right, the food farm 4 digits APR was so popular. So whenever a new farm comes out with 1,000, 2,000% APR, you just drop everything that you do. You open up the like Binance or a bridging app, right? Bridge to like BNB was very popular back then, right? Bridge your funds to BNB, open up the website and then deposit into liquidity pool and then start seeing and then start calculating how fast can you earn back your capital because the capital is typically at risk of going to zero. But if you're able to farm it back in a day, then it's like you are kind of like net positive. Right. So that has been a pretty exciting time, I would say, 3 to 6 months of every other week there's a new 4 digits APR farm and you're just bridging to new chains to just finding the best yield opportunities back then.
I guess like my question is, so obviously crypto, like that world of crypto is now like blending with this world of like obviously the president and his family, a lot of people have a lot of criticism about it, but like they're getting into crypto heavily. Like BlackRock is the biggest Bitcoin ETF. Like all of these different institutions are coming into crypto right now. I guess like how do both of you guys see that like that synthesis, I guess, between like kind of like I guess like the establishment coming in to kind of like cut out a lot of these cowboys because like what is a 4,000% or yeah like 1,000% APR has got to be something that like and I can't handle any like legislative. I've got my New York Fed vest on. Like I can't imagine what they'd say if they saw 1,000% APR on like a pool, Like how do you guys both see that happening or transitioning now?
Yeah, from my perspective, it's a very different time, right? At that point of time, there weren't many odd tokens. So all of this farm is essentially a way for the new projects to distribute their token rewards. And I think the whole DeFi regulation landscape has changed quite a lot, right? And we start to see like less and less of this kind of like Ponzi you opportunities because they're oftentimes on the fringe of like, is it in a gray area? Are they breaking any laws? And then right now, what's more popular? We see like more um, neutral farms where there are people just farming stable coins, happy with 10 to 50% APR, but they are well in the realms of like different kind of regulations that they are in line with that. Right. So I think that's what we are starting to see, right? More healthy, like non-Ponzi yield farms out there.
What say you, Ash? The evolution of DeFi in this world where, the biggest institutions are getting in and the US seems to be not only like in favor like okay with it, but in favor of it.
Yeah, I mean, look, at the end of the day, what do we all want who've been in this space for multiple cycles and have felt pain? We want recognition and broad adoption, right? And that might be an assumption, but you see it with several people who've worked in emergent technology, have spent some of their best years of their lives like 24/7 trying to cook. But my underlying philosophy, just from a broader perspective, is I believe the people that will win out with all of this institutional interests are the people who are homegrown, right? So, like, I don't think big institutions or big, large scale enterprises, they don't generally have the muscle to like think really fast and iterate really quickly and find signal and then go push full force. I think there are very few companies that are really founder led that do that, but kind of on the law of averages, not right because they don't have to. But they will be looking for people who do that, and they will be looking to reward those people in a big way to do that. And so I think that it is a different platform to of attention and mindshare that our space gets within DeFi, but it's only an opportunity for the people that have been innovating in this space like for multiple years to like reap the rewards and benefits because those folks are going to be looking for people who know what the fuck they're talking about and know how to like play in this space profoundly. I don't think they're going to replace the insight.
Progress comes through synthesis, Edmund Burke. Yeah, it's like, yeah, you have to have the new synthesized with the old, and then those two together lead to progress. Otherwise, you're gonna have like fucking disruption. But yeah,
I
man.
mean, look at the music industry, right? Like, I just say that because I worked in this space, right? You have some record executive who says, you know what, people are listening to funk music, like, they don't just say, hey, let's go create some funk bands.
Yeah.
No, dude, they go to Detroit. They like send someone there. They see who's good. They go to the clubs. They figure out who has the right sound. They actually say, hey, you know what? Funk actually is leading to this other thing that's like sounds electronic. You know what I mean? And that's what needs to happen. And that will happen here too, right? They're gonna get into the wedges, into the spaces. And I think it's not scary to me. It's more of an opportunity for everyone who's been building here.
How does the Aptos team view themselves? Because like obviously compared to Axel, like you guys are a huge organization with multiple offices and like a pretty large team. But then compared to like I guess like, BlackRock, you guys are gonna be there one day, but not there yet, right? Like how do you guys view yourself in terms of like the grand scale of like I guess crypto companies, but just companies in general?
So I mean, I'll take this to start, but I think we both, me and Jay, work at the foundation, and like our entire mission and our broader team's mission is to grow the potential of the network by betting on founders who can drive use cases and vision forward. That's literally what our job is, um, and I think I look at that product or company as somewhat in its healthy state invisible in the sense that it is infrastructure that works all the time, that is highly reliable, and it has an organization behind it that really puts startup founders at the forefront of representing their company and their vision for the permissionless network and where it should go. That's like, in my perspective, what a healthy state is for the product that we and me and Jay work on, right? So that's kind of how I think about it. Now, there is I guess, philosophy or some debate around the future of permissionless networks. Should they be super opinionated in building apps? Should they actually let other companies and startup investors like grow apps and find signal and push forward? I think that is an interesting discussion because you see kind of the new L1s who come out, big, better, faster, blah blah blah. This is EVM, this is SVM, this is MoveVM, like. But what it's going to come down to, from my perspective, is which one is the first to either build or enable a breakout app that has super broad distribution, and what are the network effects of that distribution and app across the entire ecosystem. Like that's I think what's going to win out.
I mean, we kind of have that with Polymarket, right? Like, it's obviously it's very niche, and I mean, I guess it's like using Polygon's ecosystem, Solana as well now, and I think Base, but like, like that is the breakout app for crypto, especially after the Twitter deal. Do you I guess my question on this is like, do you guys, and maybe this is more Ash, a question for Ash. It's like, do you see crypto ever having use cases outside of the world of trading? Because like, Polymarket is a form of trading, and then I guess the question is like also at a higher level, like, why crypto? And that's probably a better question for both of you guys. Like, what is a specific use case of crypto for consumer apps that you think, or blockchains, that is like pretty important? So yeah.
I mean, for me, and this is just one dumb guy's point of view, is blockchains are great for transparency, and crypto is great for atypical and typical markets, to find sticky audiences, buyers and sellers. Like, I think those are two axes that are true. And from my perspective, are foundational enough to like eat the world. Like, I actually think those things are like extremely fungible in terms of their outer bound, in terms of what could be made possible. I mean, I think crypto has introduced on the atypical side that you can find markets for human psychology, right? With memes and like financialize those things, right? Like that's a people kind of like, in a TikTok world, when you're talking to a normie who talks about that, kind of like laugh at it and we're like, oh, fuck that. But it's actually like the full progression of like us connected in a fully digital and networked world, which is like, what do we all believe? And how many of us can convince the other that we believe in this? And what's the outcome of us, our influence in doing that? I think that's just only going to expand to new verticals and things like that. I think on the basis of why crypto, specifically within trading, if I think about kind of the more institutional side, is and I've gathered these data and inputs and messaging from a lot of smart people that I get to talk to, and also Jay, is the biggest arbitrage for markets is going to be the emerging world being able to trade in established capital markets. Like today, those folks are completely cut out. I mean, this is a multi-trillion dollar art, like multi-trillion dollar art, right? If you're in Nigeria, this is just an example, and you want to buy Tesla stock, just go through the process of how to actually do that. And at the end of the day, you don't even have voting rights. You're not even a real share. You know what I mean? Stockholder.
Definitely,
You're
yeah.
just some synthetic representation, right, of interest in Tesla. And crypto is kind of in its purest form meant to remove that, right? And so you can actually say, oh wow, look at that multi-trillion dollar arbitrage. Now, when you think about stable coins and wide scale adoption, you know, scaling B2B businesses and consumer businesses now don't have to make trade-offs in which market they incubate in. I remember at YouTube, we would see in our chart every year, every end of the year, we said, oh shit, like Indonesia and India are like 5x watch time versus
Yeah, for sure.
UK, Germany. But we'd always have to make a discussion to say, well, the ARPU for that user is 1/20th than someone in the US. So what would happen? You'd put all the product innovation and focus it in the US market. You do all of the thinking and you just let India and like whatever the emerging markets just use the bare metal. That's going to change, right? Like, especially with crypto, companies are going to be able to build deca unicorns in singular markets like Nigeria and saying, hey, you know what? Like crypto use cases is an existential problem, right? For this society, it's actually necessary. I'm going to focus here and like eat market share and build here, and really serve this community and market. And so that's crypto companies and also whatever non-native crypto companies. You're going to see a great leveling and wealth distribution, from my opinion, because of access that crypto opens up. And that's going to make really cool products and innovative use cases to proliferate around the world.
Very well said, dude. Yeah, I like it. Yeah, no, I fully agree. I think yeah, no, I think opening up the world in the sense that people earn money. I mean, like a lot of the people who are in like the Axel Discord are people from around the world who are earning like full-time, essentially American salaries while living in Africa, which is insane.
That's crazy. That's
Yeah,
crazy.
yeah, yeah. No, they make a fuck ton of money. It's like insane. Yeah.
It's like financial arbitrage right there.
Dude, but it's
Yeah.
it's
Yeah.
like they're
Yeah.
putting in the work, you know? It's like why should an American dude get paid more for doing less work, right? Like that's
Yeah.
Jay,
That's
what's
what
your
Jay
vibe?
that's what Jay always says to me, dude.
Yeah, I think from my perspective, like trading is obviously
Yeah,
the
but why
largest use
crypto?
case.
Why crypto?
Yeah. I think it's because crypto enables the ability to make anything a financial asset,
Yeah,
right? Over the past few years, we saw many cycles of different things becoming financial assets, right? Like at a baseline, there's obviously like cryptocurrencies as a token, a blockchain as a token, different companies tokenizing themselves, right? That's interesting. And then during periods of bear market, we see real estates, right, tokenizing themselves as like like tokenized real estates on the borrowing side, right? And then last cycle, we also see a couple of interesting stuff, right? For example, SocialFi being tokenized, right? Friendtech, there was a
yeah,
huge moment of like SocialFi, right? Because people with influence start to tokenize themselves and earning fees off their influence, right? And that's something that we won't ever see in the like TradFi world, right? But it's something that has been enabled by like tokenization, but enabled by how transparent blockchains can be and how like people with cloud can essentially tokenize their cloud and and be able to earn off that, right? So I think that's something where, because anything can become a financial asset, right? Anything can be financialized, anything can be tokenized. You start to see like trading of any kind of assets, right? From like blue chip assets to long tail assets to exotic assets. And another thing is because trading, which was typically inaccessible to different parts of the world, now it's becoming more and more accessible. Right? Someone in Africa in the past, when they want to access um, equities or stocks, right? It might be very difficult, right? Because they might be unbanked, right? They might not have access to a stock exchange that offers US equities, right? Today, right, we see various kind of perpetual DEXs offering tokenized equities, and anyone from any part of the world are able to access that, right? So accessibility has tremendously improved with crypto itself.
Yeah, no, I fully agree. And I think I mean especially it's definitely up like the real world assets getting on chain. I think a lot of equities will get on chain. And that's probably like I mean when we think about like yield in like this conservative like pool, I think what we boil it down to is like, obviously right now Aave, Morpho, some of these pools that like are I guess like the typical things that people go to that offer 6 to 8% to get that like, that rate that's a little bit above T-bills. You're like, how sustainable is that if you get $1 billion, like, if $20 billion goes through Axel, right, and is put into
Yeah.
the conservative strat. The thing is, it's not sustainable now. Like, no ecosystem probably could take on $10 billion. But if, real world assets get on chain, then growth is going to be insane for anything that's, like a tokenized asset, at which point the cost of you'll earn more money for lending your money in crypto. So that's like our thesis for why yield is like sustainable. But yeah,
Let
no,
me ask a question. Let me ask a question real quick, and
sure.
this is just because I don't know the answer. So if you think about banks, right, what's their like source of power? It's giving out loans,
Yeah.
right? For things like houses, cars, right? Like things like that. How do you guys think about, there's no, like LPs can't like lend, like to get someone to buy a house, but like how do you guys think about kind of chipping away at some of that on the crypto side?
Like the power of banks.
Yeah, like, a bank is like if I want to make a big purchase that is foundational to my
Yeah.
life, right? I'm going to go to a bank,
Yeah.
right? Like to a house, for a car, right? Or whatever. Um, so how does crypto actually help chip away at that kind of like stronghold, or will it never?
Yeah. I mean, I definitely think it will, but like,
Yeah.
yeah, you go first and then I'll add my thoughts. I got to think about this one.
Yeah, I think typically over the past few years, we've seen mostly like collateralized lending. Banks are quite popular for um, people being able to get credit without having to put up a collateral, right? That's because you have your like various kind of credit scoring system that banks have developed over time. I think that's one thing where I'll personally hope to see like our space being further developed on. It's where there's under collateralized lending where someone is able to use your own credit to take on a loan, and that is something that starting to see a few innovative DeFi applications that are able to link with your bank account, get your credit scoring there, and then take on a loan, and then offer a loan to you based on your credit scoring in real life. I think that is a pretty cool use case unlock, and we'll start to see more of that. Yeah, but I think typically we have also saw like the base layer of DeFi where DeFi applications are trying to act as a decentralized bank, right? Offering loans to people who are holding like crypto like ETH or BTC and then getting stablecoin loans, just so that if you are BTC or ETH or even APT holder, you don't have to liquidate your assets, but you can use those assets as collateral to take on stablecoin loans for other kind of real world use cases, right? So I think that is one big unlock that crypto has unlocked, right? Being able
Yeah.
to collateralize your assets.
I actually think it's a really fascinating question because it's like a total change of consumer behavior in so many different ways, right? Because like if you think about it, where do most people who go and like get a loan from one of these like decentralized lending protocol, like what do? They do crypto trading. And it's like it makes sense because like the reason they want that liquidity is they want to make some trades and they see some alpha opportunity. But like to take it and then like almost it's like taking your chips out of the casino and then like using it to buy something real. It's interesting because it's like, then it goes almost into that idea of like I think most of the people who are getting any form of lending from crypto right now are like doing it in order to like make a return that's crazy, right? Like we talked about this with APRs, right? Like in the real world, 4% is insane and you're locked up with T-bills for a period of time. But then like, like when we talk to people about the degen yield offering, like it's like 60% and that's low, Like they'd only talk to us because it's like, oh, we've got a low, 60% APY that you could get on our on your tokens through, like using this platform with guardrails or whatever. But I think like it's really fascinating because it's like I don't know if people would actually like I don't know if the crypto community would want to do that. That's I think the fascinating part. And it is interesting because I saw this meme not that long ago where it was like, if you bought a Tesla in like 2016 instead of buying the stock of Tesla, like, like the Tesla would be worth like one third the cost of the car, but then the actual stock would be worth like, a great multiple of what you paid. And you could buy like a million Teslas. So I don't know, man. Like it's so fascinating because like crypto is so associated with growth right now that like for it to, I mean, it's definitely going to happen. Like you just have such large institutions coming in and like all these people who are like essentially outside of the economic system now will probably use it as a means to like not just try to like make their bags explode, especially in places like Argentina where stable coins are huge. And probably I think they actually and I've heard in like Venezuela they use stable coins as a means of like actually buying like homes and stuff. So it is fascinating. But yeah, I think it's like I think it's a great question. I think like that is like crypto maturity, right? The second someone's like, I want to sell my bags to buy a house, it's like that's a very existential question. And I don't know. I'm not a I would buy. What do you think, Ash?
It's interesting because I think, well, not what I think, but what I hope happens in the philosophy of access. So what we just talked about, what crypto opens up, is a more shared economy approach to some of these fundamental necessities, right? Homes, cars. And I think if that happens, like land, like if that happens, then I think like crypto, like fully, DeFi fully just like upends the banking system. The problem is like those people have control because every single person just wants to just own and sit on something. Like, you know what I mean? And I think uh, what I will be monitoring is essentially like, the banking system works for that mindset, right? Oh, fuck. Like, I have 20% down, like, give me this at this percentage, like, you stand behind the risk, right? Like, even if I default, like, I'll live another day, you know what I mean? And so will you. Um, but if people are basically like, you know what, like I rent, I live here, I rent, I don't really see a home as an asset. I see it as like just something I need right now. And things, cars become autonomous and they're just like highly networked. You don't really need your own car, right? Public transport is like fully solid. Then I think like, okay, we're in a situation where like traditional banks are really losing their stranglehold.
I think what's interesting is also we have seen um, like crypto enabling like democratization of profits from like what's typically might be swallowed by a centralized entity, right? For example, in banks, like a huge profit margin is between the spread that they are paying out to people who are keeping loans, who are keeping their assets in the bank, and then how much they're earning from their loans, right? This spread typically can get huge, right? It can be more than 50% profit margin for a bank, right? But today we see a platform like Aave, right, where the platform take rate it's in the range of 15 to 20%, and you are able to essentially get a huge margin of the borrow fees that are being paid by borrowers if you are loaning your asset out on a platform, right? A good example is also OpenSea, right? OpenSea, where they have reduced the platform fee substantially and essentially disrupt the market of a traditional broker of like art pieces where those broker firms might be taking 30-40% of any kind of art piece that are being traded, right? So we start to see like crypto companies being able to democratize this kind of profit business model and giving it back to the consumers rather than being taken in a centralized entity manner.
Yeah, no, I mean that is crypto. Like, that is the most noble case for crypto right now. Now I think the people who benefit from it are like a very small group of people who benefit from getting spread right now between like loans and what they're getting. But I do think it spreads out. Yeah, no, I think it's really fascinating. I mean, like honestly, I think I have been feeling it almost in like two separate pools where it's like you look at like what's happening with cursor and vibe coding and like how like most people's jobs are kind of fucked. And like then you also combine it with like changing consumer behaviors where like I honestly don't think I want to buy. Like like a lot of my friends wouldn't want to buy an apartment, because like they want to be flexible. Like they can't, right? Like they'd rather like buying an apartment is like almost like a scary thing for them. And then on top of that, like certainly, I mean, if you live in New York City, you'd never want to buy a car. So it's like fascinating to think about like that. I think it's a really fascinating like topic, honestly. But yeah, I mean, the 45 minutes run really quick when you're talking with friends. But what's on the horizon for Aptos? What is really cool for both of your guys' verticals and then also for the company?
Yeah, Jay, do you want to start with the DeFi space and trading?
Yeah, so DeFi, it is very pivotal moment where I think we see as the next juncture of DeFi for Aptos. And what that means exactly, it's a period of time where we want Aptos users to see that there are more yield opportunities. And that's where like Excel comes very handy. We want people to see that there are more wealth effect opportunities where we are starting to see more and more of the DeFi projects that are going to launch their tokens soon, right? So more altcoin trading opportunities on the chain. And very specific to our global trading engine thesis, we are starting to see like more and more different kind of trading platforms that will be launching on the chain itself, right? Historically, over the past year, Merkle has been one of the largest trading platform for perps on Aptos, right? Just this month in June, we are going to see two new order book perp dexes launching. One is called Kana, one is called Ekiden, and we are also working with a lot of builders launching different kind of trading platforms, be it options trading, perpetual tradings, RWA, and equities trading, right? The list goes on. And as a user, you will start to see like more and more of these trading opportunities, trading products going live on Aptos and really fulfilling the whole ecosystem of a trading engine.
Yeah, and I think building on that, for me, when I think about the ultimate place we want to get as the network is a singular place for any DeFi user or trader to get the best of money making opportunities on Aptos and funneling them through there, and one API for any developer to build any type of app on a fully distributed system. That level of simplicity is where we want to get. And I think that's what it's going to take to win as well. So that's where we're like laser focused.
Yeah, I couldn't agree more. I mean, that is what Axel fully believes. It's that you just got to make this shit obvious. And
Exactly. Yeah.
yeah,
It's time for us to start telling people that we see on the street about what we care about. And the first thing they're going to do is pull up their phone,
yeah,
right? They're not going to go through the 6 to 9 months of getting beat up and getting rugged to find the true product that like fits their
yeah.
need. Like people don't have time for that shit, dude. So like we all need to step up. And that's kind of like what I hope, that's why it's so amazing finding Axel and like you guys as founders, because you guys think along the same thesis. And we're just kind of like excited about having, more folks like you guys like pushing the boundaries forward.
Well, thank you guys for your time and thanks for hopping on the Talking Intentionally podcast. Love to see you guys down the line. Yeah, you guys going to ETH Cans?
I don't think so. Some folks might, unless Jay's going to ask to go right now.
Yeah, flying over from Singapore.
Yeah,
Well,
we
okay.
might. Are you going to be there? What are you
Yeah,
cooking up?
Axel
Are you?
Axel Team One Crypto's Got Talent. So we're going to
Oh,
Oh
nice.
shit!
our prize. Yeah, yeah, yeah. It's gonna be a lot of fun. So If not, we'll see you guys in New York. Maybe we'll do some kind of like Axel Aptos event in the city or something like that. But until then, thank you guys for watching. Means a lot that if you stay till the end, we'll get you some points for watching. And yeah, thanks to the Aptos guys for coming on. See you guys.
Appreciate
All
it.
right.
Bye.
See you.